The US dollar is higher versus the major currency pairs to kickstart the US trading session. In this video, I'll take a look at the euro versus US dollar, dollar versus yen, sterling versus US dollar as they battle and traders battle and push the greenback higher. The move to the upside in the dollar is largely as a result of the fear for the other countries outside the U.S. as a result of the Trump tariffs going into effect coming up on August 1st. ECB's Nagel said that if the tariffs go into effect, that Germany could go into a recession, and his thoughts of a gain of 0.7% growth in German GDP in 2026 could also be faded away to zero if they were to be enacted. So that is weighing on the foreign currencies and giving the dollar a little bit of a boost. So I'll talk about the technicals that are driving those three major currency pairs in this video. Let's get started. Taking a look at the euro versus US dollar on the hourly chart, we saw a volatile price action yesterday after all the comments about Powell being fired and then not fired and so on and so forth. But we ultimately ended up settling back below the 100-hour moving average. And near this trading range right through here, or this swing area right through here, which had a number of different swing highs, going back to this period right through here before breaking to the upside through here. We traded above and below it earlier this week with resistance initially against that high of that swing area and trading yesterday before breaking to the upside. And as I mentioned, the price settled just above it in trading yesterday. Today, we've started to move back into that range, initially trying to hold support in the Asian Pacific session here, but ultimately breaking to the downside during the European session. And we've seen further selling pressure down to another swing area down through here, which has again some other swing areas. It goes back in time through here as well. But what we see is that in trading yesterday, the low price did find support buyers against the low of that swing area near 1.1563 and 1.1578. And trading here today, we came down once and bounced higher. We came coming down again to start the U.S. session, and we are now in that range. If we do break below it, then the next target would be the 38.2% retracement of the move up from, if I go back in time, from this low way back here and in early May to the high price that we saw in the month of all the way to the July 1st. So getting to that 38.2% retracement of that bigger move to the upside would be the minimum retracement that would show that the sellers are trying to take control. That level comes in at 1.15372. Conversely, if we do find support buyers here, the battle continues between the yellow areas with this at the resistance on the top side, this on the downside. We also have the falling 100-hour moving average, which although broken yesterday in this sharp move to the upside, was a key resistance level all through here on the way to the downside. So the trend still remains to the downside, but we are looking to get below the swing area to increase the bearish bias. Let's take a look at the dollar versus yen next on the 4-hour chart. As we saw yesterday, we saw the dollar move to the downside and then move back to the upside. And trading here today, that move to the upside has seen the price try to get back above this swing area. The swing area goes back to these periods right through here. We were at different swing lows, got a little messy there and here, but then reestablished support here, here, and here before breaking to the downside and not returning to that level until right here, which is in the month of June, where we found willing sellers again, pushed to the downside again. In trading this week, we did move above that level and was looking pretty good until Trump and his Powell comments sent the dollar back to the downside. We've since rebuilt and working back above that area between 148.56 and 148.73. If we can stay above the 56 level now, that would give the buyers more confidence to push toward the 50%. The 50% for this currency pair is of the move down from the 2025 high that was reached in January to the 2025 low. So the year's trading range, getting above that would be important for traders from a tactical perspective. So watch that level as a key target on the top side at 149.37. If the 56 level can hold, if the 56 level can't hold, then we could see a rotation back toward the June high, which came in at 148.019. Be aware of that level on the downside. Finally, let's take a look at the sterling versus US dollar. And this again, we'll take a look at the hourly chart. And I want you to focus on this area down through here between the 1.33607, 1.3378. We came down to that level in trading yesterday before rotating back to the upside, and then rotated back down again in trading here today to this swing area right through here, and once again found some support buyers. On the top side, the 134.14 level did a pretty decent job of holding resistance at the highs in trading here today. That level corresponds with this low right here, and you can also go back to this low right here and this low right here, which all came in at that 134.14 level. So there's something about the 134.14 level. Admittedly, there are times when it does go above and below, like here and here, and again through the volatility from yesterday. But 134.14 seems to be a pretty decent ceiling for this currency pair. We also have a 61.8% retracement in addition to the swing area to deal with from a technical perspective. But those are the boundaries for our technical trading in the pound versus US dollar today. So there you have a look at 3 major currency pairs to kickstart your trading day on this July 17th. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.